Hello there! Continuing from part 1, the second part of tutorial series 1 of bite-sized corporate reporting will look at the application of the measurement principles set out in IAS 16, Property, Plant and Equipment, focusing on the question requirement of discussion with suitable calculations. As ABC Limited wishes to adopt the revaluation model, we should show calculation for depreciation, surplus and deficit arising from revaluation as follows. Please be reminded the question requirement is discussion with suitable calculation. Thus, merely showing the calculation will not earn the full marks. Some of the points that can be included in the discussion are as follows. 1. In this case, the renovation work was completed on 1st July 2019. Thus, no depreciation should be charged in the financial year ended 30th June 2019, given depreciation commences only when the building is available for use. 2. The financial year ended 30th June 2020, ABC Limited should recognize an annual depreciation charge in its profit or loss of 0.4 million. The revaluation of the building to its fair value of 12.5 million resulted in a surplus of 0.9 million in the financial year ended 30th June 2020. This should be presented as other comprehensive income and held in the revaluation reserve within other components of equity. 3. Let's look at the financial year ended 30th June 2021. In the financial year ended 30th June 2021, depreciation being the allocation of the depreciable amount of the asset to the periods expected to benefit from the use of the asset would be calculated based on the fair value of 12.5 million over the remaining useful life of 29 years, resulting in a depreciation charge of 0.43 million in the profit or loss. 4. The revaluation deficit of 1.07 million from the revaluation on 30th June 2021 should be recognized as an expense immediately in the profit or loss. However, as there was a previous surplus of 0.9 million recognized and held in the revaluation reserve relating to the building, to the extent the offset is made, the deficit of 0.9 million should be recognized in other comprehensive income, with the excess of 0.17 million recognized as an expense in the profit or loss. Lastly, you could show the journal entry to recognize the surplus and deficit as follows. In the final part of tutorial series 1, we'll put on our thinking caps and look at the effect on our answer if changes are made to information given in the question.